right. Welcome everyone to today's live stream. Today is Monday, April 7th, 2025. Hope you're doing well. I know things are tricky in this market. Do your best to relax, keep breathing through this process. There is tremendous opportunity out there. I'd like you to look for the opportunity and not get caught up in the fear. And I'll share some examples of how to do that toward the end of the stream. But I want to dive in to take a look at what is happening in this market. And let me pull up my screen here. So this is the VIX. This is what, this is how Wall Street gauges, investors gauge, it's actually the fear gauge. And it says the VIX Wall Street's fear gauge is soaring. Here's why. And as you can see, this is a 20-year chart of the volatility on CBOE, stands for Chicago Board of Option Exchange. So any stock company that has options that trade against them, this gauges how many buyers or sellers there are of calls and puts. And so it's showing that Wall Street's fear gauge is heading skyward. The CBOE Volatility Index, or VIX, recently stood over 10% higher at about 50. It had jumped 60 in earlier trading Monday. And then it goes on to say there have been only two periods in the last 2 decades, 20 years, when the gauges ended the day above 50. That was late 2008, early 09 during the financial crisis, and early 2020 as well during that sell-off. So it is closely watched during market turmoil. It tracks expectation for stock swings over the next 30 days based on what investors will pay for options tied to the S&P 500. When fear is rising, traders are typically more likely to turn to and pay up for options to protect their portfolios. This means the VIX tends to move inversely to the stock market, spiking when the market swoons. Over the last 10 years, the VIX has averaged a little over 19. It hit a record intraday high of 89.53 in October of 08. So it is going up. It continues to go up. It's at 45.66 at the moment. This is a live feed of it. So in that 45 range is very high. Fear is very high with the equity markets. And you know, it's something to consider. It's something to watch. But what you're getting here is the emotional sentiment of investors, and that is literally what trades, what motivates people's trading is their emotions. So when fear is high, usually it's because there's a sell-off. What's the saying? You know, buy when there's blood in the streets. My friend, there is definitely blood in the street, but it's not the time to buy. And but here is something that I wanted to bring to your attention, and I'll talk in a moment when the time is to buy. So you know how a lot of allocations are, Wall Street wants you 60-40, right? 60% stocks, 40% bonds. Well, BlackRock, you know, who owns everything, the head of BlackRock, Larry Fink, wants investors to embrace 50-30-20. Now, this is where I think we need to really look out for this beyond everything else. Stock market will come back. Yes, it's painful in the process in the near term, but this is the thing we need to keep our eye on and understand what's happening here. The BlackRock CEO proposed portfolio model includes private assets like real estate, infrastructure, and private equity. Basically, they're trying to sell the narrative that 20% of your assets, and we're talking 401ks, and this is in the US, 401ks, savings, you know, private assets are going to be moved into private. So individual assets into private assets. in private credit, what this means is that they're wanting 20% of your assets and pension funds, things of that nature, to do with it as they will, to help them build out their infrastructure and use your money to do that. The 60-40 portfolio invests 60% in stocks. I covered this, 40% in bonds. For years, it's been the benchmark for many investment and retirement portfolios. So in the past few years of sweet market gains have made that blend pay off in spades. So far this year, we've seen the success of 60-40 is being tested by inflation, market uncertainty and volatility, and a whack-a-mole array of fiscal, trade, and policy changes. So they're wanting to sell this as the 60-40 portfolio may no longer fully represent true diversification. So everything is always under the guise of diversification. They want you diversified because if you're diversified, then you can't really build real wealth in an asset class because you're scattered among multiple asset classes. You all have heard me talk about this in the past, but it's always under the guise of diversification. So we need to really watch out for this. I don't know if this is something that's going to be coming soon. They're talking about private funds. Investors must pony up a hefty minimum investment of $50,000. Investors typically have an annual income of at least $200,000 or $300,000. So that would be what's called an accredited investor, a high income oriented investor that's only had access to this type of investing in the past. Well, they want to make this more mainstream for people, and they're trying to sell it as a really good idea for you, but frankly, it's not. It's more to benefit them. So just be very careful. But if you think, Canada's any better, well, let's look at our Mark Carnage. It says he's insane. Western society is more. This is what he says in his book, Building a Better World for All. That was the name of his book. Remember this BBB, Build Back Better campaign, right? That they're focused on. Western society is morally rotten and has been corrupted by capitalism. I know this is just unbelievable to read, to even hear out loud. This requires a rigid controls of personal freedoms, industry, and corporate funding. This is not a promise to make the lives of ordinary people better, but temporarily worse. This will be a world of severely constrained choice. Less flying, less meat, more inconvenience, and temporarily more poverty. Assets will be stranded, gasoline cars will be unsellable, and inefficient properties will be unrentable. This is the thing to keep I think the stock market is a big distraction right now. I think there's so much happening behind the scenes that this is a thing to really, really be concerned about. So part of, what we can do to protect our freedoms is do your best to not have so much money in the banks and continue to buy gold and silver. They're dropping in value right now, and I'm talking the actual physical coins, gold and silver. You got to have some of that available to you, and do your best to pay down debt. This is a debt-based economy. If you've been able and fortunate enough to keep your debt at a minimum, great, continue to do that. This is not the time to incur any debt. It's just not the right timing of it. There's more of a control on funds, and there's more of a tightening going on because a lot of consumers are behind on their mortgages, car payments, etc. And in the U.S., interest rates are now under scrutiny as to whether or not they're going to continue to drop them. But the reality is mortgage rates have dropped very, very little. So this has not been a big help to the average consumer. So there was a question in our stock forum. By the way, welcome to all our new investors here, subscribers, members. Ram, is it time to get into the market now or wait, especially the big techs? This is what it's time for. With this volatility going on in the markets, we're seeing 1,000%, 1,000 point swings in prices of stocks uh, on prices of an index. The Dow Jones Industrial Average, for example, is huge price swings today. Down 1,000 at one point, now up modestly. And I think that with these type of swings, these are unprecedented. Now the Dow is down 277. It was down 1,000 earlier, and then up. Up at some point, it turned positive. Nasdaq was down big time. So we're seeing these unprecedented intraday price swings, which continue to allow you to make money in this market. And let me give you an example, like a stock such as Meta. When you see the type of intradaily price swings, 481 to 539, that's just today alone. That is almost a $60 price swing for this stock. So what you can do is use our software, look at the stock on the single daily view, and you can see when the MFI is high, which was 92, that's the time to sell off shares, right? Just sell them. When the MFI is low, look at the stock hit 505 this morning. MFI was 36. That's the time to buy. So use this MFI on the daily, the single day chart view to learn when to be buying and selling, because you can make a lot of money swing trading these stocks if you have the interest and the bandwidth to sit there and do some daily trading. This would be the market to do it. Give you another one, Netflix. When you let's look at the daily on Netflix. Intraday look at this day's range, 821 to 906. Unbelievable. An 86 point swing, a 10% price swing just in today's trading alone. And if you look at the single day chart, we can see it reflected. So this morning it sold off first thing in the morning, and then it spiked to 904. Look at this price action, 823 to 904. So this is not the kind of market to go full on in the market with all your money. Again, continue to keep money in cash on the sidelines. And but you can certainly swing trade some of these stocks, and these big tech stocks are great to swing trade. And we've also added, I don't know if you noticed, but recently the candlestick view for the charts, very helpful. Now this shows on a year basis, but we're going to add them to the daily here, hopefully fairly soon, fingers crossed, and that's going to be super helpful for us. Where you see these candlesticks trading on the daily. And then start to learn. I'll be talking about how to interpret the candlesticks once we add them to the daily chart. And I just, on last week's call, I was talking about potential for war and I referenced the Vice President Vance talking about. Take a listen.
We're going to invest in the Marine Corps and the entire United States military like we never have before. Over $1 trillion we're going to invest in building up the manufacturing base of this country so that you guys, when you do go to war, when you have to go to war, you've got the best weapons anywhere in the world.
So there you go. When you do go to war, you've got the best weapons in the world. But, there's a narrative that's coming very clearly here in this Trump's trade war. They're all kind of the same headlines here. And it seems like the narrative is pitting the U.S. against China. Very, very scary concept here. Trump threatens China with additional 50% tariffs. when they use this kind of languaging in the headline news, I think this is the thing that we need to be most concerned about here. The Toronto Star stocks sink when Trump threatens to escalate trade war. I mean, listen to this. Look at these headlines. I mean, just unbelievable. And I think this is the war that is unfolding right now. That is happening right now is this trade war, and it's very clear to see that it's intentional. It's very clear to see that it's putting a hurt on the markets and people's individual portfolios. But please don't panic. I said I would promise to loop back around to the idea of giving you some mental strategies, some mindset strategies. And I think it brings me back to when I first started meditation 25 years ago. Shoot, longer than that. Really an intense practice started 25 years ago. And I had to learn to not allow noise or external, anything external to take me out of a meditative state. And I trained my brain to allow, whenever I heard a noise, that it would deepen my meditative state. And that has always been a helpful practice of mine in meditation. But I also want to bring it back around to this market, because there's so much noise out there. There's so much fear and uncertainty that I think it's designed to really take us off our path, to take us out of a peaceful state and out of the state of flow. When you're constantly worried, when your adrenals are heightened, it's pumping cortisol through your body, which is not helpful one single bit. So you're getting this rush of adrenaline. Notice, like, are you holding your breath? Is your heart racing? Like, what's going on internally, and how is that affecting? And when you're not, how is that affecting you and the physical and your ability to think? I think this is throwing us off of our path and our ability to think. And when we can't think properly, we tend to make mistakes. We tend to do things that aren't in our highest and best. So I really want to encourage you to relax through this the best you can. Block out all the noise. It's just numbers on a screen. And as long as you're holding your positions and not selling them, not panic selling, I assure you this will pass. It always does. If it doesn't, then something else is unfolding in a whole new way that we'll have to deal with once we hit that time frame. But for now, the volatility is here to stay. You can make a lot of money in a volatile market. I've talked about this in the past. So really consider your options here. And if you want to take a position in stocks, this is what I would do right now. I would sell, let's say you're interested in buying shares of Palantir. The stock is now at just under $78 a share. What you would do is you would sell a put that, so you're going to get paid to buy the stock. Oh, this is the calls. Let me click puts. So let's say the stock is at 77 right now. And if you wanted to buy 100 shares at 74, you're going to be paid $297 to buy 100 shares at $74. So a couple of things are happening here. You're going to get paid to buy the shares, $297 for 100 shares. And then you're going to have the ability to buy them more cheaply, and not at close to $78, but you're going to pick them up at $74 a share. But actually your cost basis is more like $71 because you've received $297 to sell this contract. So you'd be selling a put option that eventually you maybe put the stock, if it hits 74 or lower by this Friday. These are just going out this Friday. If you wanted to go out further to next Friday, April 17th, you're looking at even more. You're going to receive even more. Let's go to the puts, April 17th. I don't show the 74 contracts, but here's the 75s at 452. So you're going to earn even more money as you sell these contracts against the stock. So you're selling a put contract so it's same thing as a call, except same thing in terms of you have an expiration date, you have a strike price, right? Expiry. I would stay with a declining market like this. I would just stay with this Friday contracts, strike price, whatever you're comfortable owning the stock at. Like I mentioned, the 74s, now they're at 278. So you can see they trade very fast along with the stock price. But here you're buying a phenomenal company, Palantir. It's on sale. You're going to get it even more cheaply and get paid to buy it. That is the way to be buying tech stocks right now and to invest in the markets. In my opinion, if you wanted to just pick up some stocks cheaply, inexpensively, on sale, that's how to do it. Get paid to buy the stock. Hope that was helpful. Have a fantastic